Well, we are cautious generally. I mean, because, we see volatility, which has spiked up in the first half of this year, continuing in the next 6 months, maybe even beyond that. Trade tensions, rising interest rates, concerns about the renminbi, China slowdown, geopolitical concerns in Europe, to just name a few factors, will continue to play out over the next 6 months, 9 months, and that will create more volatility. But we also see volatility as creating opportunities for investors. So we are not negative on the markets. We're not telling investors to stay away from the markets. We're saying stay engaged, but perhaps keep a slightly higher level of cash than you usually would, because there will be opportunities, interesting opportunities the next 6 to 9 months as the markets, gyrate up and down and perhaps even pull back and overreact to some news from time to time. That's going to create buying opportunities.
So lighten up on your positions. Is that what you're saying, in equity, bonds, or currencies?
No, we're not saying that. If you are sitting on pretty decent returns, I mean, more than what you had expected, yes, of course, it makes sense for you to take some profits off the table and, keep more dry powder. But that doesn't mean that, you want to keep a lot of dry powder in the market. For example, a typical investor in a good market would probably hold 5%. In a volatile market like this, maybe 10-15% of cash. That sort of levels we're talking about. Of course, you're sitting on bond markets as well, and, and you made good returns, take some money off the table and rotate and look for opportunities where, markets have pulled back sharply. Like, for example, Asia, emerging market high-yield bonds, which have pulled back sharply, and there could be some interesting opportunities on those areas.
Okay. All right. High-yield bonds in particular are quite interesting now. Where are you looking in Asia?
Well, Asia as a whole, the way we recommend, asset class for our clients is typically we tell them to invest it through a fund. So essentially to buy a fund that invests in Asian high yield, emerging market high yield. But Asia looks interesting, I mean, essentially the emerging market space has taken a beating, including Asia, but Asia's fundamentals are generally quite positive. And so we're saying, take a diversified approach towards Asia. We're not targeting any specific markets.